In the recent times, we have seen multiple traps in the S&P 500 and in the Nasdaq and also in the Dow Jones. And these traps were formed for the purpose of profit booking. We have seen a trap, next day fall, trap, fall, trap, fall, trap, fall. Again and again we have seen these traps and then the next day the fall. Now question is, will it continue? No, not now. Because this time there is a heavy change in the technicals and S&P 500 and the Dow Jones have gained 100% absolute bearishness through the technicals on the daily chart. Now in the previous S&P 500 weekly technical analysis, I have shown you that why these were considered as the traps. And now in the recent week, the Monday 2nd of March, we have seen a trap. Why this was a trap? Look carefully the closing. The closing was at 6881 and this was something that was not supposed to happen at the very first place. This is why in my final update and in the other updates, first update and the midday update, I have again and again repeatedly mentioned to my community members that closing above 687x create a very dicey, very confusing and a suspicious condition for Tuesday. And then what happened on Tuesday? A heavy gap down open and it came down sharply, a very good, very heavy profit booking. But because it came down so heavily and it hit the lower level support zone, that is why it was clear that intraday it will be able to move up. It will get the technical support for an intraday bullish recovery. And that bullish recovery was allowed from 672x. And everything was good on Wednesday on 4th of March. In the first 30 minutes or so, as S&P 500 was trying to stabilize. However, then we have seen that within the first hour, it moved up sharply and disrespected the 685x. And because the obligation to the 685x was not fulfilled, that is why it is clear that this is also a kind of trap. And then we have seen a fall on Thursday. And on Thursday, S&P 500 has fulfilled its obligation to the 685x. And why it failed to move up on Thursday? Again, the same reason. Because the entire range from 687x to 689x was acting as very heavy resistance. On Friday, S&P 500 failed. Not just the S&P 500, but the Dow Jones has also failed. And both of these indices failed at the same time. And all of that happened primarily because of the Dow Jones's condition that was the open equal to high condition. So finally, the S&P 500 and Dow Jones are 100% absolute bearish. And now if all goes well, then in the near term, we are going to see the repetition of the pattern which was seen in the year 2022. What was in the year 2022? A correction. And if that correction is realized in the S&P 500 in these times, then a minimum of 10% fall will happen in the S&P 500. This minimum of 10% fall means from 6,500 to 6,300 range. Now, if all of these conditions are bearish, are there any chances for the bullishness? Yes, but that will be conditional bullish. So all of this, the conditional bullish movement, the range, the fall to the 6,500, 6,300 and under what condition there will be the recession from the correction. All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of March 9th. Means from March 9th, which is Monday, to March 13th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First is the technical part, the second one is the probable movement. In the technical part section, I will cover the technical indicators, the pattern in the technical indicators, the short-term, long-term trend, bullish, bearish, etc. Second part is the probable movement. In the probable movement section, I will tell you what we are expecting to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the coming week. So guys, now I am going to start with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, this is the technical part section, and here I will discuss the weekly and the daily chart of the indices. Okay, weekly chart means the long-term trend for a month, for 3 months, for 6 months. Daily chart means the short-term trend for a week, for 2 days, 3 days or so. Okay, so first I'm going to cover the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now if you look into this, the candle, so let's first discuss the candle. So this is the weekly candle of the S&P 500. Now the S&P 500 was trying to avoid any kind of bearish condition earlier. Okay, before this, the previous week, we have seen repeatedly S&P 500 was avoiding the bearish condition. Okay, avoiding the bearish condition means that S&P 500 has given 1 day, 1 weekly closing below this, the red moving average. Okay, then recovery. 1 closing below the red moving average, then the recovery, okay, and so on. Now this the last candle, this candle closed below the moving average, not the red but the green, okay, and is indicating very heavy pressure. Other than that, the candle itself is very heavy bearish candle. Very heavy bearish candle. Closing of the candle is below the moving average, below both of these, the moving average, indicating that on Monday, okay, there will be a gap down open, or irrespective of any open, there will be an initial or intraday bearish movement on Monday. Okay, and also next week, if there comes no good news, no supportive data, economic data, okay, then the S&P 500 will struggle heavily to clear and to give a closing above the red moving average. Okay, it can give a closing above the green moving average. That's not a big deal, but a closing above the red moving average will cancel the bearishness caused by the green moving average. Okay, so overall a bearish candle indicating gap down or initial or intraday bearish movement. Now this is the last weekly candle of the Dow Jones. If you look into this, the candle, again exactly the same story, the same thing. Very heavy bearish candle, very heavy bearish pressure. Okay, and also if you compare it with the S&P 500, S&P 500 gave a weekly candle below the red moving average for the week of 9th of February, whereas Dow Jones did not. Okay, Dow Jones was hesitant to give any kind of bearish indication or bearish candles. Okay, but Dow Jones within a single candle has breached the red and the green. So again, a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. And exactly the same, a gap down open, okay, or an initial or intraday bearish movement, because the S&P 500 closed below the 6762.10 and the Dow Jones closed below 47681.14, and also in the open equal to high condition. All of these three indices, S&P 500, Dow Jones, Nasdaq, are indicating one common thing, an initial or intraday bearish movement on Monday. Other than that, the two prime index, S&P 500 and Dow Jones, are indicating a gap down open. Okay, whether there will be 100% a gap down open on Monday or not, this will be further confirmed through the daily candles. Okay, so that I will discuss once I cover this, the weekly chart. So candles are clear. Okay, so heavy, very heavy pressure. Now let's talk about the technicals. First, the technicals of the S&P 500. Well, technically S&P 500 is bearish through the Bollinger Bands on the weekly chart. This is a big change. Is neutral. Okay, neutral or bearish through the moving averages on the weekly chart, and is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bearish through the MACD and is bearish through the stochastic RSI on the weekly chart. Okay, now what does all of this indicates? And also there is no saturation, no overbought, no oversold. Okay, now most of the technical indicators are bearish. S&P 500 is 70% bearish on the weekly chart. This is happening after April, May. Okay, almost after like 9 months. And in the previous S&P 500 weekly technical analysis also, I've shown you the pattern, okay, movement, and something that was indicating pressure and the change in the direction. Okay. So S&P 500 is 70% bearish on the weekly chart. Technically, Dow Jones is also the same. Okay, Dow Jones is also bearish through the Bollinger Bands and is neutral and bearish through the moving averages on the weekly chart, and is bullish through the Ichimoku cloud on the weekly chart. And the Dow Jones is bearish through the MACD and the stochastic RSI on the weekly chart. In the last to last week, the week of 23rd of February, Dow Jones got the absolute bearish confirmation through the MACD and the S&P and the stochastic RSI. Okay, that is why in my previous S&P 500 weekly technical analysis, I have specifically and I have clearly mentioned that now entire market is under pressure. Whenever there will be a doubt, it will fall. So in this manner, the Dow Jones will also be considered, or will also be seen as 70% bearish on the weekly chart. The long-term trend change is happening. All of these three indices, the three prime indices of the US stock market, are 70% heavily bearish. Okay, but this has not confirmed a trend change. Trend will change only when there comes a confirmation through the moving averages. As long as the moving averages are trading in this, the pattern, the clear fan out pattern, okay, trend has partially changed, okay, but it has not fully changed, and still S&P 500, Dow Jones and the indices are in a condition to recover the bullishness or the bullish trend. But for that to happen, some conditions must be fulfilled. Otherwise, if this continues for not one, for at least for 2 weeks, okay, means if there comes back to back red candles, okay, until the end of the month, okay, March, then in the first week of April, okay, there will be a confirmed crossover in the moving averages, and then the trend will officially, okay, it will change. Okay, but for now the trend has not changed, though it is bearish, but it has not fully changed. 70% bearish. Okay, now how this bearishness is going to impact? Okay, there is one more thing that I want to show you here, and this is, I think, in the Dow Jones or the S&P 500. Yes, in the S&P 500. Okay, what is there? So we are seeing a heavy divergence in the MACD. Okay, heavy divergence in the MACD. What happens whenever when there comes the heavy divergence in the MACD? Well, in that case, we see some recovery in the index or in the stock. Okay, however, this divergence is not as heavy as this divergence or this divergence. This means that still there is some good scope for at least 1 or 2 red candles to weekly bearish candles. Okay, but then the S&P 500 and all of the indices will automatically these will come under the technical compulsion, okay, to get a good bullish retrace, a good bullish reversal. Okay, now the only problem is that one more thing, if there comes not one but two red candles, weekly red candles, in that case the indices may hit the oversold condition, not overbought but oversold condition on the weekly chart. So heavy divergence and the oversold condition, okay, this means that a technical recovery, a good recovery. But for now, short squeeze is allowed. Okay, now this short squeeze can happen when it comes down and enters into the 6,600 range, the S&P 500. Okay, for the Dow Jones, okay, there is a different range, a different zone. Okay, when it comes down, then technically there will be a short squeeze condition. Okay, so that this short squeeze I will mention, okay, in the probable movement. This means that technically a continuous weekly fall for 1 to 2 weeks is allowed, but after that, means from the 1st of April, okay, S&P 500, if there comes 2 continuous weekly red candles, then from the 1st of April, S&P 500 and the entire US stock market will come under the technical compulsion to give a bullish retrace, a heavy, at least 2 to 3% bullish candle, a heavy bullish candle. Okay, Now that bullish candle may trigger a short squeeze, okay, but it cannot be confirmed. So once it happens, then in the coming week, in this the weekly technical analysis and in the daily updates, okay, I will cover that part. So now in order to get more clarity that how much more fall is allowed before there comes any bullish retrace, okay, or what will be the trend in the short term, let's move on to the daily charts. So guys, this is the daily chart. Daily chart means one candle represents one day. So guys, before I discuss the candles and the technicals, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, let's first discuss the candle. This is the daily candle, okay. So it's a normal bearish candle indicating, okay, just the bearishness, okay. However, look at the closing. The closing is below the Ichimoku cloud. Okay, what does that mean? This means bearishness. Okay, so although the candle is a normal bearish candle, but because the closing is below the Ichimoku cloud, this is why it is indicating a gap down open on Monday, or irrespective of any open, there will be an initial or intraday bearish movement on Monday. Okay. Now, the Dow Jones, the candle of the Dow Jones, well, this is more bearish. Why this is more bearish, if you notice? First of all, the open and closing both are below the Ichimoku cloud. Okay, candle itself, it is a limited bearish candle. Okay, the shape of the candle is a hammer in a manner that it is indicating actually a bullish side movement. Okay, not a fall, but a bullish side movement. But because the open equal to high condition is there, closing open and closing are below the Ichimoku cloud. That is why this candle, rather than giving a reversal or so, it is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, so only in terms of the candles, okay, this candle will simply indicate a bullishness, okay, initial or intraday bullishness, but because of the technical conditions, okay, it is trading under pressure. Okay, and to make the matter worse, the previous candle formed on daily candle formed on 5th of March in the Dow Jones was also exactly the same, means the open equal to high condition was there. Now the very heavy bearish condition is not in the Nasdaq and is not in actually the Dow Jones. It is in the S&P 500 because the open was inside the Ichimoku cloud, but it failed to sustain and close below the Ichimoku cloud. That is why I mentioned that if the S&P 500 closes in this manner, and also the Dow Jones closes in this manner, and also the Dow Jones closes in the open equal to high, then all of these indicates heavy pressure and a gap down, or irrespective of any open and initial or intraday bearish movement. Now let's analyze the technical indicators. First, the S&P 500. Well, finally the S&P 500 is bearish through the moving averages, Bollinger Bands, Ichimoku cloud, the MACD and the stochastic RSI on the daily chart. Okay, there is no change. Finally, the S&P 500 is 100% absolute bearish, 100% absolute bearish after 8 or 9 months. Okay, Dow Jones is also the same. It is bearish through the Bollinger Bands, Ichimoku cloud, moving averages, and also the MACD and the stochastic RSI. Well, there was some change, no change. Okay, still bearish. So Dow Jones is also 100% bearish through the all of these are technicals on the daily chart. This is also happening after 8 or 9 months. Okay, well, Nasdaq is already trading bearish. Okay, there is no change in the Nasdaq. Overall, the short-term trend is clear. The short-term trend is absolute bearish. What? The short-term trend is absolute bearish finally after 8 or 9 months. Okay, the change is happening. Now, when the trend is bearish, what does that mean? Does that mean that there will be continuous fall and there will not be any recovery? No. Okay, this does not mean a continuous fall out this. So trend means that now, yes, now the fall will be there. Okay, it will come down further, but it will give some bullish movement, some bullish recovery, and then fall. There's some bullish recovery, then fall. Exactly what we have seen in the Nasdaq. Okay, so S&P 500 in that manner. Nasdaq, we have seen some recovery, fall, recovery, fall, recovery, fall. Okay, and then it is going to come down slowly. It is going to come down. Okay, so that is the trend, and there will be a technical condition to allow that the bullish movement or the short squeeze or the bullish retrace. Okay, but for that to happen, first S&P 500 and the Dow Jones will have to come down. Okay, so if, see, as of now, the problem is that if the S&P 500 and Dow Jones moves up, or even try to move up and gives a green candle, okay, then in that case it will create more room in the bearish side, and then there will be very heavy fall. Okay, so this is why it is in the best interest of the market, of the stock market, of the Wall Street, okay, that it should come down and should remain bearish Monday and Tuesday, so that there comes the technical conditions, okay, that can trigger a short squeeze, okay, or a heavy bullish retrace. Okay, and then that bullish retrace will be there at least for 1 to 2 days, and that will be sustainable without creating any problem to the S&P 500 or the Dow Jones. But for now, because of this closing, there is a very heavy condition that on Monday, okay, we are going to see more fall. But guys, no matter what is happening in the Middle East or what will happen in the near future, okay, a correction or the recession, okay, because I'll be giving you the daily precise updates of the S&P 500, Dow Jones, which I give to my Patreon community members every day. So I give the pre-market analysis 1 or 2 hours before the open of the stock market. Then I give the first update, okay, when the first hourly candle forms. Then I give the midday update after 3 hours. Then I give the final update 1 or 2 hours before the closing of the stock market. And in this manner, my Patreon community members are very well aware of what is happening and what is going to happen. And guys, it's not just about these daily precise updates, but I also give the opportunities in the premium stocks of the US stock market, top 30, 40 companies of the US stock market, and the ETFs, etc. And I give 30 to 50 opportunities in the premium stocks. And that's not all, because I also give the mid-week update, and it's a video technical analysis generally given mid of the week every Wednesday, and I discuss the bullish bearish conditions, the precise levels, zones, etc. in this the midweek update video technical analysis. So guys, in order to get all of these, the daily precise updates, the premium opportunities, and the mid-week update video technical analysis, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will find this button which says membership options. And when you click on this button which says membership options, then you will see these 3 levels, level 1, level 2, and level 3. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates, levels, zones, opportunities in the premium stocks, and the midweek update, the video technical analysis, and they are very well aware of what is happening and what is going to happen next. So guys, whenever you want to get all of these, the daily precise updates and the opportunities and the midweek update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, now let's discuss the second part of the agenda. Second part of the agenda of this the analysis was the probable movement. Okay, means what is going to happen in the S&P 500, Dow Jones, and in a manner to the entire market in the next week, the week of March 9th. Means from March 9th, which is Monday, to March 13th, that will be Friday. Okay, so whatever is expected to happen, I'm going to discuss here. First thing first, the data, the economic data. Okay, the data that was not released in the month of February and January because of the government shutdown, okay, is going to be released in the coming week, the week of March 9th. On Wednesday, the CPI data, the inflation data, okay, which was not released in the month of February, okay, will be released before the open of the stock market at 8:30 AM Eastern Time. This data will heavily influence the movement of the stock market. Okay, then on Friday, the PCE and the core PCE data will be released. This data was not released in the month of January. So this means that the only significant data will be released on Wednesday. That will be the CPI, the inflation data. Okay. Now, recently we have seen that the inflation data has shown that the inflation is moving up. Okay, this is a concern. This is a concern for the Wall Street, for the stock market. Why? Because this means that Feds are not going to give the relief that they were supposed to give earlier. Okay, because inflation, rather than coming down, it is moving up, and this is the problem. And this was exactly the same thing, okay, that was there earlier in the year 2021, because of which Feds have raised the interest rates quickly. Okay, and that has triggered a correction in the year 2022. Okay, now, but this time it is different. This time, see, already we were talking about the AI bubble. Okay, that was one thing. It was supposed to burst in 2026, but no one knew that when it will burst. Okay, but now we have a big problem. That problem is the war in the Middle East. There is a choke point in the name of, and the name is Strait of Hormuz, and 20% of the oil and the gas supply, okay, it is through the Strait of Hormuz. The fall on Tuesday and the trap on Monday. Why they have built the trap? Because they knew that something bad is going to happen. What was that the bad thing? Bad thing was that the Strait of Hormuz is going to be closed. Then on Tuesday, before the open of the stock market, there came the news that now the Strait of Hormuz is closed. Now, because the 20% of the oil supply is blocked, that is why the oil prices have moved up heavily. I think by more than 30% within 1 week. This means that everyone in the world, everyone is going to feel the heat. Heat means inflation. Because when the oil prices moves up, then the price of everything will move up. When the inflation is high, then Feds are not going to give any kind of relief. Rather, there may come a condition that Feds may be forced to increase the rates. And even a 25 BPS rate hike will trigger very heavy fall in the global stock markets. It will not be that easy to push the stock market into the correction or the recession. Okay. The first barrier is the 10% mark, 10% psychological mark. Okay, 10% in the S&P 500 from the peak. This was 7,000 to 7,002 means 7,000. Okay, means 700 points, means 6,300. Okay, when the S&P 500 loses the 6,300, this will trigger that heavy fall. Okay, heavy fall to what? Maximum to 20%, means 1,400 points. 1,400 points means 5,600. This means that everything is good and well as long as S&P 500 is holding and trading above 6,300 and is not losing the 6,300. Okay, and if the situation deteriorates, okay, then 20%, it must not lose the 5,600 mark no matter what, because losing the 5,600 means officially it is in the correction. Okay, S&P 500 is in the correction. When S&P 500 would be losing, when S&P 500 will be losing 20%, then Nasdaq will be losing like 30%. Nasdaq will be heading for the recession. Anyways, recession, okay, or the correction, this will be confirmed not through the S&P 500, not through the Nasdaq, but through the Dow Jones. Because Dow Jones will have to lose 20% so that it officially confirms a correction in the entire US stock market. Entire, not just the US stock market, but also mostly in the European markets, okay, and Asian markets. So now I have given you, okay, the idea what is expected to happen or what can happen in the coming week, okay, or the weeks. Okay, the big picture, I've shown you the big picture. Okay, the only problem for the entire market is now the oil. Okay, it is the oil. And why that will be a problem? Because they say this rally that you are seeing here, okay, this rally, okay, up to 7,000, beyond 5,000 or 5,000 rally, this you are seeing here. This was based on the assumption that there will be a relief, okay, and Feds are not going to punish. Punish means Feds are not going to raise the rates, but Feds are going to give the rate cuts, and Feds did. Okay, so the Wall Street or the global stock markets have already priced in something that was supposed to happen in the future, and if that does not happen, then it will be back to the points, okay, the range where it was supposed to be. For now, we are expecting a gap down open. Okay, gap down open or irrespective of any open and initial or intraday bearish movement on Monday. Okay, the only relief to the market was through the daily candle of the Dow Jones, okay, which itself was, the candle itself was supposed to trigger bullishness, but because of this, the open equal to high condition and then the open and the closing below the Ichimoku cloud, okay, it is also expected to trigger a gap down or the fall. Okay, now irrespective of anything, whether there comes a gap down open, okay, or not, okay, what we know is that S&P 500 is going to struggle heavily. It is going to struggle heavily when it try to move up. Okay, now when it try to move up, then what it will try to achieve, what it will try to gain. Almost for 1 month, S&P 500 was defending the 6,800. It has not given a single closing, okay, in last 1 month, except this, the last candle, okay, below 6,800. So S&P 500, in order to turn bullish, in order to trade or to remain bullish or even to form a trap, okay, it will have to move up and to close above the 6,800. This is confirmed and this is clear. This must happen, otherwise there is no bullishness. Because if the S&P 500 remains within the 6,700 range, okay, in that case again and again it will come down and will close below the Ichimoku cloud. Okay, now if on Monday there comes a second closing below the Ichimoku cloud, any kind of closing, red, green, or any kind of closing below the Ichimoku cloud, then it will fulfill the condition of 2 consecutive closings below the Ichimoku cloud, and exactly the same will be seen in the Dow Jones. Okay, when the Dow Jones is giving the same thing, the same picture, S&P 500 is giving the same thing, okay, Nasdaq will automatically, okay, it will be coming down and it will be forming the same condition. This means that on Tuesday, in that case on Tuesday, we can see a gap down open, okay, or irrespective of any open and initial or intraday bearish movement. So if all our technical conditions are going to trigger the bearishness or the fall, then what is going to help the market? Only 2 conditions. Only 2 conditions. Okay, number 1 is the technicals. Technicals will help the S&P 500 and the Dow Jones to move up, provided S&P 500 comes down and the stochastic RSI of the S&P 500, at least the stochastic RSI of the S&P 500, especially the K channel, at least the K channel hits the 0. Okay, if not the D, then at least the K, it should hit the 0. Okay, when it hits the 0, then it will trigger a bullish condition. But the problem is that as of now, as per the numbers values of the stochastic RSI, 2 red candles are needed before the S&P 500 hits the K equal to 0. 2 red candles. Okay, this means that before Tuesday, technical relief, okay, S&P 500 is not going to get the technical relief. Okay, in the Dow Jones, let's see if there will be any technical relief. Dow Jones, yes, there may come a technical relief before Tuesday. It can be seen on Monday. If there comes a good or heavy fall, then the stochastic RSI of the Dow Jones may hit the K equal to 0. Okay, in that case, the relief will come on Tuesday, not Monday, but on Tuesday. Okay, now at the same time, there is a problem. If somehow, if for any reason there comes a green candle, there comes a green candle of any kind, of any type, doesn't matter, just a green candle. In that case, the stochastic RSI, which was supposed to come down, move towards the 0, it will not move towards 0, rather it will move up. And the Dow Jones, the stochastic RSI of the Dow Jones, which is almost in a condition, then it will also move up. And what does that mean? This means that it will create more room in the bearish side. This means that then heavy fall Intraday fall for 2 to 3 days fall is comfortably allowed without any problem, without thinking twice or thrice. Okay, this is the technical condition. What is the second condition that can trigger the bullishness? Second condition is the non-technical condition and is the war. Not actually the war, but the Strait of Hormuz. Okay, S&P 500, so not the S&P 500, not just the S&P 500, but the global stock markets. Okay, Wall Street, okay, the US stock market, global stock market cannot move up or cannot move up significantly, cannot turn bullish, okay, unless there comes a confirmation that the Strait of Hormuz is now open for shipping. Okay, when there comes a news, a very good recovery. Okay, but this recovery will not be considered as the bullishness or the change in the technicals. Why? Okay, see, there are limited chances, okay, that it will turn bullish, it will move up, and but for that to happen, okay, the news that the Strait of Hormuz is open, it must come, okay, on or before Monday, when the stock market comes into the session. Okay, on or before Monday, this news must be there. When the news is there, then S&P 500 will already be trading within the 6,700 range. Then intraday, it will be in a condition to move up to 1% or 2%, not 2%, but 1.5%, you can say comfortably. If this now, but let's say S&P 500 and the Dow Jones and the entire market comes down and there is another red candle on Monday. Okay, then there comes a news after market hours on Monday or on Tuesday. Okay, then there will be a good recovery, but that recovery will be from around the 6,700 or from the 6,600. Then that recovery will be limited to the 6,800. Okay, maximum 6,800 or within the 6,800, like 6.8 4x or 6.83x. That recovery will be there, okay, up to that point. Okay, because then it will be a little late. If there comes 2 consecutive red candles, there comes no news. And if the news comes, okay, after Wednesday, on or after Wednesday, okay, then it will be late. It will be too late. Okay, because then the market will already be in the technical condition. Okay, but technical condition to get a reversal, but that reversal will be limited, not heavy. Okay, if there comes a news, then also that reversal will be limited, not heavy. Okay, there will be a problem. Now intraday on Monday, there will be a bullish condition. Okay, this bullish condition will be there, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now this bullish condition is short squeeze. I will see, I am not confirming that it will be 100% short squeeze. Okay, but for that to happen, first of all, there must come a heavy gap down open, or even if there comes a normal open, but that open must be in the open equal to high condition. What is open equal to high condition? Means immediately after open it comes down, just like the Dow Jones. Okay, so last day on Friday we have seen that it opened and immediately after open it came down. Okay, so what does this indicate? This indicates heavy pressure. So either a heavy gap down open and the open equal to high condition, or any kind of open but the open equal to high condition. Okay, and it comes down and it comes to the to my range in the 6,600. Okay, 6,600 zone. Okay, which is around 665x 6x. Okay, it comes to that. Okay, and in between 665x 6x and the 6,700, there is one more, a very small zone. Okay, this I have repeatedly mentioned to my Patreon community members on Thursday and Friday. Okay, that whenever it comes down, then technically S&P 500 will be under compulsion, under a technical compulsion, okay, to give or to get a bullish retrace. Okay, so this bullish retrace will be heavy if If this condition is fulfilled, a heavy gap down open and the open equal to high condition, or irrespective of any open and open equal to high condition, any other condition will not be able to trigger any good bullish retrace or the short squeeze of okay, this will not be there. Whatever bullishness will be there other than these two conditions, that bullishness will be limited. And the Dow Jones can build the pressure. It can build the pressure on the S&P 500 and the Nasdaq. Okay, so that these stack indices can these can come down. But now the good thing is that the indices do not need the help of Microsoft or the Goldman Sachs or the Nvidia, because indices have already come down and are trading at 100% bearish, absolute bearish. Okay, the only problem here is 6x/7x. Okay, this small zone. This zone is the problem. This zone is the problem for the S&P 500 and for the bears, not the bulls, the bears. Okay, why it is a problem for the bears? Okay, when the market is already bearish, when S&P 500 is already 100% bearish, because S&P 500 is so close that even a little recovery, okay, the S&P 500 can recover the 6x, 7x, okay, the small zone. Once it recovers, okay, then it will automatically close within the Ichimoku cloud and can cancel the bearishness caused by this candle. Okay, other than that, it will then be in a condition to help the S&P 500 to re-enter into the 6,800. And if this recovery, if the S&P 500 closes above the 6,800, okay, doesn't matter what kind of candle, okay, is that, what number is that, but above 6,800, okay, then this will create a problem for the bears, because then this will not be coming down, but means at least for a day or two. And before that, okay, what it will do, what the S&P 500 will do, the S&P 500, okay, it will be first, we will be moving up, will be testing the moving averages and the around 3x, it will be moving the testing the moving averages, will get, and then it will be getting a rejection from the moving average and will be coming down. Okay, so it is now creating, it is now building lower highs. Okay, similarly it will build the lower high and it will come down. You can clearly see here, okay, that it moved up, build a lower high, came down. Okay, lower high came down, lower high came down. Okay, so this is what, this is the bearish cycle. Okay, for the short term it is creating a problem. Okay, and for now we need 2 consecutive daily closings in order to confirm that yes, now the market is going bearish, there will be more fall. Okay, recovery will depend on the technical factor, and the non-technical factor is the Strait of Hormuz. Now one more thing, it doesn't matter what the President Trump says. Okay, it doesn't matter. Why? Because the Strait of Hormuz, okay, 20% of the oil supply. Okay, this is what matters. But once again, when the S&P 500 comes down to the 6,600, it will remain under the technical obligation condition to recover from, okay, the 665x, 6x, the zone that is there. Okay, and before that, in between this and the 6,700, there is a small zone, and the S&P 500 has the technical reasons. Okay, and the technical calculations are indicating that S&P 500 should recover. Okay, but if the S&P 500 fails and it comes down, then it will recover from here. Okay, from this is the standard historical zone. If you have subscribed to my YouTube channel, then I think in the last year, okay, during these times, I was discussing this again and again, and we have seen the magic of this. This was acting as the heavy cushion, heavy support to the S&P 500. Now after getting a reversal from here, see, this reversal will be there only for one day. Okay, at least or only for one day, not more than that. This reversal may or may not trigger a heavy bullish movement, because what the technical condition says, the technical condition says that when it comes down, then it must get a reversal, at least an intraday reversal, at least an intraday retrace, means it is not allowed to come down. Simple, it is not allowed to come down without retracing back. Now when it retraces back, then we will have to see if that retrace has triggered enough bullish momentum that S&P 500 has re-entered into the Ichimoku cloud or not. If it has re-entered into the Ichimoku cloud and has closed inside the Ichimoku cloud, okay, then there will be a condition that yes, S&P 500 can sustain and survive for one more day, for the next day. Okay, then it will be getting a rejection from the moving averages and will be coming down. So now one thing is clear, that most likely we are going to see a staircase pattern. Okay, what a staircase pattern, it was not there, but now this the staircase pattern we are going to see. This is what, this is the bearish cycle. This is the bearish cycle. Okay, this is what we are seeing in the Nasdaq. Nasdaq has given that the staircase pattern, and it is giving that the staircase pattern because Nasdaq is in that the bearish cycle. Once again, this is a short term bearish cycle. Short term bearish cycle means up to 10% fall maximum is allowed in this the short term bearish cycle. Maximum 10%. Maximum 10% means 6,300 in the S&P 500 maximum, and not more than that. Okay, because before the S&P 500 could even move to the 6,300, okay, technically it will become it will hit the saturation, and when it hits the saturation, then there will be a heavy reversal. Okay, that will be a very short term bullish reversal. Okay, means this very short term bullish reversal will be in this the bearish cycle, and it will give you a good opportunity that you can short or you can sell, and it will be coming down. Okay, this very short term bullish reversal will be like 3%, 3 to 4% maximum. Now back to the movement. Okay, this the movement. Now the problem is the big problem is through the Dow Jones. Dow Jones will give some relief to the S&P 500 and the Nasdaq. When it will give the relief when there comes a bullish reversal in the Dow Jones, and the Dow Jones it breaches the high of the candle formed on Thursday 5th of March. Okay, now as long as Dow Jones is closing below the high of this candle formed on 5th of March around 48,526, there comes no breach, Dow Jones and the entire US stock market will remain under heavy pressure. Okay, now if on Monday there comes a gap down open and the Dow Jones does not breach the open of this high of this candle, not the open, the high of this candle, okay, formed on 6th of March, that was 47,634. Okay, 47,634. Then we will see more fall and more pressure. Once the high of this candle is breached, then there will be some more room, around 1.5% or 2% room, and the Dow Jones will be allowed to move up. And when the Dow Jones is moving up, then S&P 500 and Nasdaq will move up. S&P 500 will move up to or above 6,800. Again, it will struggle at the moving averages and will get the rejection and will fall. Okay, but the good thing is that there will be some bullish reversal, right? So Dow Jones, this is the only condition, this is the only and the heavy condition in the bull side, and is not seen in the Nasdaq and is not seen in the S&P 500, but in the Dow Jones. Once the Dow Jones breaches the high of this candle formed on 5th of May, and if somehow Dow Jones sustains, and also if there comes a closing above the high of this candle, means 48,526, then this will create a possibility that the Dow Jones can move up above the Ichimoku cloud in the bull side and can help the S&P 500 to trade to the, see, S&P 500 will not be in a condition to move above or to this side of the bullish side, but it will be in a condition to come very close to the 6,900, provided Dow Jones gives this kind of condition. Otherwise this is not possible. This means that the bullish side is possible, but the bullish side will be limited. Bullish side will be limited to what? At first, the bullish side will be limited to the 6,800 psychological mark. Okay, no, before that it is limited to the 676x/6x, the zone, then to the 6,800, then to the 6,800, around 3x or 4x, wherever the moving averages will be. Okay, this is the bull side. If it gets the support from the Dow Jones, then the Dow Jones will, then the S&P 500 will further move up and will be moving to the 687x/8x. Okay, and this is exactly what was creating a very heavy resistance zone for the S&P 500. And what will be the absolute bullish condition, a very heavy bullish condition for the S&P 500 and the Dow Jones? The news. Again, the news that the Strait of Hormuz is open for the shipping. Once that news is there, then wherever it will be, the S&P 500 will be, it will move up, and then we will have to see what the technicals are indicating. Okay, but then a good bullish movement will be there. For now, okay, the bullish side will remain limited and 6,900 is not expected. A movement within the 6,800 may happen. Okay, it can happen, not a problem. Now, if the fall continues, in the S&P 500, then what will happen? In that case, S&P 500 will be coming down to the low of these candles. Low of this candle was 6534, 6521. This candle 6521.92, 6521.92. This was the low of this candle. Once the S&P 500 clears this heavy support zone, which is there in the 6,600 range, 5x, 6x, and in between the 6,700 and this. Okay, once it clears, there comes a confirmed closing below this, the zone. Okay, then it will be coming down to this, the low of this candle, the 6,521. This will act as the natural support, because earlier also here on 6,500 low was 6,551 and the low was 6,555. Okay, that was there. This means that 6,500 has a very heavy support for the S&P 500, but losing the 6,600, okay, 5x, 6x means there will be like 100 points fall, more fall in the S&P 500. It will be coming down and then it will find support there. Okay, but before it can come down to the 6,500, there will be a good recovery. There is a possibility. There is a good possibility, and this possibility says, if there comes a news that, okay, first of all, that there is no relief from the war in the Middle East. Okay, oil is moving up, and the oil is very near to or has gained more than 100. Okay, $100 per barrel. Most likely it will on Monday. Okay, or is very near to or close to its all-time high. Okay, like it is more than 110 or 120. Then we will not see any good recovery. What we will see, if you remember what we have seen in the year 2020, okay, very heavy fall, exactly the same we will be seeing here. Intermittently there will be a good bullish recovery because the technicals will overheat. Okay, to cool down, there will be good recovery, but then we will see very heavy fall. Well, during that, the 2020, the COVID time, we have seen like 5% fall, 6% fall, but this time it will not be that much. It will be 3%, 4% fall within one day. Okay, but this fall will be there. If there comes heavy fall and the S&P 500 breaches the 6,600 5x, 6x, it enters into the 6,500, comes down, then there will be a heavy recovery of at least 2%. 2% to what? 2% back to the 665x, 6x. Why? Because again, it will overshoot the technicals will be heavily, technicals will then overheat, and then it will have to trigger some very heavy, some good bullish movement at least for 2-3 days or so. Okay, this is also applicable when there is no news that the Strait of Hormuz is open. No news, but still it will be applicable. Why? Only because of the technicals. Okay, there will be absolute oversold conditions, right? So as early as on Monday, we will get a confirmation that what we are going to see in the market for the rest of the week, for the entire week, and we may not need to wait for the Wednesday, the inflation data, because as long as the oil is moving up, inflation will by default move up, and earlier the delayed data is not going to help much the Wall Street or the stock market. And if through or based on the delayed data, the CPI data, the stock market moves up, then most likely it will form the trap. Okay, and then again we will see the fall. So this is now clear that bullish side is limited, restricted. Okay, bearish side is open, and now for the entire week the movement will be in between 6,800 and 6,500. The movement of the S&P 500 in between these two. Okay, there may come a condition that S&P 500 may lose the 6,500, but for now chances are not there, because at least 1 to 2 days of recovery is we must also consider 1 to 2 days of recovery. Okay, and when that happens, so this means that 6,500 in the bearish side, okay, with limited possibility for the 6,400, and bull side will be 6,800. And only when there comes a news, confirmed news, that the Strait of Hormuz is open, then only it is allowed to test the 6,900 psychological mark, or a very little into the 6,900, the zone, that is heavy zone 691x, and then it will fall. Okay, so then it will build its base in the 6,800, the S&P 500. But guys, no matter what is going to happen, okay, these the times of heavy volatility, or these the hard times, whatever will happen, I will keep you posted through these daily precise updates, so that you can trade safely and you are very well aware of the numbers, the levels, okay, trap, and all of these, the profit booking, etc. And guys, if you have not yet joined my Patreon community, then I have given the link in the description of the video, and also in the comment section. You can follow that link and you can join my Patreon community. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.